Welcome to Investago TV's weekly review, your essential source for global economic updates, keeping you informed on the latest market trends and financial insights every single week. Buckle up. In Buenos Aires, President Javier Milei's controversial budget cuts have led to protests. Yet Argentina marks significant fiscal milestone under his leadership. Its first monthly budget surplus since August 2012, a mere month after Milei took office. This turnaround challenges critics of Milei, a far-right libertarian with an extensive economic background, aiming to stabilize Argentina's fiscal woes. The surplus is a key step away from dependency on the International Monetary Fund's $44 billion loan, highlighting the failures of previous socialist policies that have led to economic stagnation, high debt, defying predictions of a financial ruin by pro-establishment voices. Under President Biden's administration, the US has seen a record 7.3 million illegal crossings at the southwest border, surpassing the population of 36 states. This year alone, encounters are on track to exceed last year's record. Critics argue this surge is due to deliberate policy decisions, contrasting sharply with the previous administration's stricter controls. While the Biden administration cites external factors driving migration, opponents highlight pull factors like job opportunities and lenient policies. Additionally, some argue that this influx benefits the economy by filling jobs and boosting the GDP, a view that has sparked considerable debate. China is experiencing a deepening crisis in its real estate market, with the latest data revealing significant declines in home prices across major cities. The drop in prices is seen as a major challenge for Beijing's policymakers, who have been attempting to revive the market through various measures, yet have struggled to make a meaningful impact. This downturn is contributing to broader economic issues, including deflation and reduced consumer confidence, highlighting the critical role of the real estate sector in China's economy. Despite efforts to stimulate the market, including interest rate cuts and financial support for approved developers, the fundamental issue of waning confidence among potential homebuyers remains unaddressed. The situation poses risks not only to China's economic growth, but also to local governments and the financial sector, given the substantial hidden debt and the impact on bond markets. Following a robust holiday season, Canadian consumers have scaled back their spending amid high interest rates, with retail sales dipping by 0.4% in January after a 0.9% raise in December. This pullback reflects the growing financial pressure on households, with expectations on further softening in sales as unemployment rises and mortgage costs increase. The decline, the largest in 9 months, indicates a weakening economic support from retail sales into the new year. High interest rates are notably impacting consumer spending, while the Canadian Chamber of Commerce reporting a 1.4% drop in consumer spending in January, the first year-over-year decrease in almost 3 years. Despite the overall 2.2% increase in retail sales in 2023, driven by vehicle and parts dealers, the outlook remains cautious due to high borrowing costs and subdued consumer confidence. That's a wrap for today, and I'll catch you next week. Don't forget to follow us on our social media channels to stay updated. Wishing you continued success on your journey.